Welcome back to another Forex analysis video for the upcoming week. The first pair we have today is the Canadian dollar versus the Japanese yen. So right here we can spot that the price has been forming a pennant pattern like formation with successive higher highs, higher lows and lower highs. Also, historically speaking, we can see that the price has been on a uptrend, and recently it had already given a breakout from a pennant pattern, and after that it has consolidated itself in another one. So if we shift back to 1 hour time frame, we can see that the price has been on its journey from the lower range towards the upper range, and currently it has been forming a flag and pole like pattern. Let me just draw it out. So on Monday, if we see there is a breakout from this pattern, we can easily go long from long above this swing high with our stop losses just below the swing low, and our first target should directly be this upper range. Also, since this upper range has been tested multiple times, there is a huge possibility that the prices might give a breakout. So we can just go ahead and take the subsequent swing highs as our next targets with by trailing our stop loss, obviously. So the next pair we have with us is the Australian dollar versus the New Zealand dollar. We can see that historically the prices had been choppy, and currently the price has been trading between these ranges. And on the last trading session, the price had been trading near the upper ranges, and at the same time, just before closing, it had given a breakdown. So on Monday, if the prices go below the swing low, we can easily short it right here with our stop losses above the swing high, and our first target should be this support zone, and second target should be this support zone. Let me just mark it out. This will be the first target, this will be the second target, and the third and ultimate target should be this lower range. It will easily give us somewhat around 1:4.6 risk to reward ratio. So the next pair we have with us is the New Zealand dollar versus the Japanese yen. It is showing a very interesting thing right here. We can see that the price had been on an uptrend and then it took a rejection. So if we put the Fibonacci right here, we can see that the price took a rejection up to the 50% level, near the 50% level, and then it shot up again, but the next high was not higher than the previous swing high. So it formed a kind of a double top like pattern, and then ever since it had been following this trend line. So currently the prices are trading just around the upper ranges. So as soon as the market opens and we spot any kind of bearish candle here, we can easily go short with our stop loss above the swing high, and our first target should be this swing low, and our second target should be this range low. But at the same time, this lower range has been tested multiple times. We can see it was tested here, again right here, and then here. So on the fourth attempt, it is here highly expected that it will give a breakdown. So in that case, we can easily take this lows as our subsequent targets while trailing our stop loss. For the bullish side of this trade, we can go bullish above this swing high. And our target and our stop loss should be below this bearish candle, and our first target should be this swing high, and then subsequent target should go like higher highs, the previous lower highs, and we will easily achieve a risk to reward ratio of 1:1.2. This is not really a great risk to reward ratio, but we can always manage. But this pair has a huge potential of giving returns on both ends. So the last pair we have with us today is the gold spot versus the US dollar. We can see that it has been forming somewhat like a bearish flag and pole pattern, and the prices are currently trading between the ranges, but there is a huge possibility that it will give a breakdown. There are some macro news, and at the same time we can see that in the historical pattern, it gave a breakdown from here, fell vigorously, and after that it consolidated itself and then fell again. So if it follows the same trend, it is expected to give another fall, and as per the flag and pole pattern, we can expect the target as much as the length of this pole. So it was around 24 points. So we can, as soon as if we spot any kind of bearish pattern right here, if it gives a breakdown with some bearish candle, so we can go short at this point with our stop loss below the swing high, and our target should be around whatever it was around like 24 points. And at the same time, theoretically speaking, this range might give a bullish breakout as well. So in that case, we can just go we can go long from that point, and our stop loss should be below the last swing low, and our target should be first target should be this resistance zone, second should be this resistance zone, and final target should be near these points. So that will be all for today. Thank you.